Every trader who is highly profitable has a system that enables them maximize the trading strategy they actually use. As a trader, you need to know the strategy you are using actually works by going back in time and seeing how many times they played out. All this while I've been trading, what actually allows me to hold trades through drawdowns, what strengthens my trading psychology, what enables me to know how certain currency pairs, certain commodities move is with backtesting. Backtesting is simply taking the rules-based strategy you've developed yourself or learned from a mentor, then going back through historical data on a specific currency pair on a specific time frame with a reasonable sample size, and then documenting how many times that particular strategy actually played out or how many times those rules were met. What I'm basically saying is that when you're backtesting, you are simply going back in time on a particular currency pair to see how many times the strategy you use actually played out on a specific currency pair you are using. What you always want to do is to use a reasonable sample size, because you don't want to just take 5 scenarios and then simply just say because it happened 3 out of 5 times on 5 scenarios, it's going to actually work. It basically means that if you're practicing with support and resistance on, let's say, a pair like GBP USD, now you want to go back in time and find at least 50 scenarios where this particular strategy played out. It enables you to know exactly how this currency actually works, how it moves, and then all that. It also tells us that it's likely to continue making profits anytime those rules are actually met. So as a trader, backtesting basically has so many benefits for you, and it is the main thing that actually grants you confidence in any strategy you use to trade. In today's video, I'll be giving you a complete tutorial on how to do backtesting as a forex trader. So today you're going to learn exactly how to know that whatever strategy you're using actually works, what pairs to use it on, every single information you need that will actually enhance your profitability as a trader. If you cannot wait for me to get into it, you know what to do. I just need you to like this video, make sure you hit that like button. I also need you to subscribe to this channel and also hit the notification bell so you get notified anytime I go live or anytime I drop a video on YouTube. We'll be right back. So as a trader, what backtesting actually does for you is that it actually helps you pick out the best currency pair for whatever strategy you trade with. Me, for instance, if I'm trading a pair like the JPY pairs, GBP JPY, Euro JPY, and the likes, what I like employing the most is my trend continuation strategy. If I like using this strategy on my JPY pairs, because with my backtesting, I've realized that that is a strategy that actually works the most on that particular pair. It also enables you to know what times that the strategy performs best. It lets you know what times of day that there's much more volatility in a particular currency pair, what times of day is very advisable to trade a particular currency pair. You learn all this through backtesting. And then the most important one, which is the final one, is that it enhances or improves your trading psychology, because in the process of backtesting, what happens is that you actually end up seeing how many times the particular pair goes into drawdowns, how many times it consolidates before it eventually moves in your favor, how many times it hits a stop loss. So in this case, if you have a live account that you are trading after backtesting the pair, you realize that you're able to hold through the trade. Sometimes as well, you also know that this time is a bad trade, so let me just exit. So backtesting enhances your trading psychology, because you know when to keep holding a trade and you also know where to exit, because you've studied the movement of that particular currency pair with a reasonable sample size. The main thing we're doing today is that I'll actually be giving you all the rules that I employ in my backtesting. I'll also be showing you the main tool I use for my backtesting. I'll also pick a specific currency pair and then we take an example on how I backtest on this particular currency pair. With the rules of backtesting, the first and then the most important thing is for you to do it yourself. There might be so many instances where you sign up for a mentorship class and then the mentor tells you he enjoys using a particular strategy because he has backtested it and he has realized that it works a lot. What you also need to do is you also need to do it yourself. Take the best time frame you're actually comfortable with trading and then backtest that particular strategy on a specific currency pair you also know you enjoy trading. You want to make trading decisions based on your own experience. So the first and most important thing is that you need to do it yourself. And the second one is the backtesting tool. So I'll be showing you the best and then the major backtesting tool I use to attain trading success, which is TradingView. So let's go on to the charts. So basically TradingView is where we do the backtesting. If you look on the screens, you can see clearly I have AED JPY here. So my TradingView, it's in my name, everything is also here. You have all your tools, all your drawing tools, all your analytical tools are here. The main thing we use for backtesting is the bar replay tool. And one very important thing to note is that for the TradingView, normally I think if your TradingView is a free version, you are only able to do your backtesting on the daily time frame. I don't know if it's still that way because I've been using the pro version for a very long time now, so I actually don't know whether it's still on the daily time frame or not. Majority of traders are on the lower time frames, the 4 hour, the 1 hour, the 30 minutes, 15 minutes, and the like. So you need the pro version to be able to backtest whatever trading strategy you actually use. The best times to actually get a pro version is on Black Friday, because on Black Friday, I think the last week of Black Friday, you normally normally get. You click on the bar replay tool, you go back to whatever time in the market you want to go back to, and then apply your trading strategy there and know how exactly to use it to trade. The third rule I use is a strategy to backtest. With a strategy to backtest, you know it needs to be one strategy at a time. It's always advisable to apply one strategy at a time because you don't want to confuse yourself with so much information. So I always advise you make it one strategy at a time, and then make sure you also add your confluence. What other confluence do you add to your trading strategy when you're trading? I like to use my candlesticks in addition. So it means that basically I apply my candlesticks at the various key levels I'm expecting reversals, continuations, or breakouts on. Then I just go ahead and then I see how many times that the market respected the rule, how many times it was actually profitable on my trading strategy. You need to pick your favorite currency pairs because those are the ones you trade the most. You not get to ascertain the best currency pairs that suit whatever strategies you use. Without wasting my time, let me take one specific example of a currency pair and then I'll show you how exactly I would backtest when I'm on this particular currency pair. Let's just go back in time and then pick a specific time and then just start backtesting from there. And then what I'll be using here today is, I think, support and resistance. So I think we are in June currently. Hold on. I think let's just start from this particular high here. So 16 June, what did I say? I come with my bar replay tool. The main thing I'll be using for this backtesting is support and resistance. So once I mark out my most recent high as my resistance, and I'll need my most recent low as my support. So I have my most recent low as well. You can see my vertical lines here. My vertical lines here basically represent my weekly period separators. So what do? I just wait and see how the market reacts on if it's actually going to get to any of these key levels. Now it creates a new high, which is a lower high here from this particular high. So what do? I simply just adjust it to this particular high and see how exactly the market is going to behave on this high as well. Then I keep going as well to see if it's going to respect that high as well or not. So the market now moves away from this particular high. Now we have a new low here. The market moves away from this high, creating a lower high here. Now I bring it to this lower high, then I keep going and look at how the market reacts on this. So now what did I say? I'm applying support and resistance. So you look at this price point, the market fails to break here. It was just a wick. It came back here, hit it again, and now what did it give us? It gave us a support here. So now I finally ended up getting a bullish engulfing here as my confirmation. So now let's say I'm taking my buy here. So long position, stop loss right here. I'm risking this amount of pips on this position. I'm looking here as my main take profit for the day if the market is actually going to hit that particular level or go down and then hit my stop loss. So what happens is you want to document it. Means that you risk a certain number of pips and then you made you a certain number of pips eventually. If you lost as well, you also want to document it on it. Then what happens? So it goes in our favor, hits our take profits. You keep adjusting your levels as the market keeps going. So now it finally comes to this new high here as well, which is also our resistance. So once it comes here, you want to see if you're also going to get another confirmation here as well. So our first instance has played out. So we wait, make sure we get our confirmation. We finally get the confirmation after this candle. So it means that we can now bring our short position here using the resistance here as a reference point. Then we just bring it here now. So you realize that this is the second scenario which you also want to ascertain whether it played out or not. So you realize that how much does it eventually make on this position? Does it come to the final take profit at the bottom? Yes, it comes to the final take profit at the bottom, which is about 140 pips, risking 30 pips on this setup. So you realize that AUDJPY is aligning well with our resistance and our support. So now it's back at this support. We want to see if we're going to get a confirmation down here for another buy. So let's wait for the next candle. It runs through, no confirmation, so we don't take any trades here because we do not get any confirmations. You realize that it just keeps going down, lower high, lower low, lower high, lower low, lower high, lower low. So what happens here is it comes back to retest on this level. You can see break and then retest. It comes back to retest on this particular level, consolidates along this range. After the retest here, this zone becomes our new resistance. So this is what we call the support 10 resistance. So now it becomes our new resistance, and then we also have a new low down here. So this is also our support. So we continue moving. We have a new low down here as well. We want to see how the market reacts when it gets to this particular resistance. We keep going. You see it consolidates, gives us a bearish confirmation, which is an evening star on this resistance. What does it mean? We are trying to see if a sell here will be reasonable, if we are going to be profitable by taking a sell, a short position here. You're supposed to be reasonable and very smart in your take profit decision. So what I always say is that my TP1 is at least what I'm risking as my stop loss. Then I have the other take profit levels based on the structure of the market. So I can look at how the market consolidated here then see, okay, this is now my TP2, and then let's say finally I want to see if the final take profit will be here. By the time I hold the trade all the way down here, I've made majority of my profits already. So from here, you realize that we smash our TP1, then it goes back and then hits our stop loss. You can see here that we made about 50 pips, then it's eventually reversed. So if you did not have your TP1 and then take your profits here, you realize that you see 50 pips, because you want to hold all the way down here, it goes back and hits your stop loss. So first lesson learned on this backtesting, you need to have multiple take profits, and you need to also take your profits as the market keeps moving. So now we move this away from here. We have a new high up here now. We want to see what becomes of this high, whether it's going to be a new resistance, which is going to be a reference point for us to take more trades. And then we have our support here, which is also the most recent low as well. Then we just continue. So now the market goes back to the resistance. So we want to see if we can actually get another confirmation here as well. We do not have any confirmation yet, so we wait till we get a confirmation. Then we place our risk to reward there for our short position. So you have another confirmation, bearish engulfing right after this consolidation we got on the pair here. Now, after getting our bearish engulfing here, we bring back our risk to reward short position here and stop loss on top of the range. Do we make profits on this position or not? Strong, bearish runs through all our take profits. Now this becomes our new resistance, which is a point up here. We want to see how the market keeps going right after here. Now what happens? Does it give us a new low? Now we have a new low here. So you realize that with the third straight scenario, we've made profits with our resistance and then our support. How does it happen now? It runs through this point, no confirmation. We finally have a new low here, and then we now have our new resistance here as well. Then we want to see what the market does when it gets to any of these key levels. It breaks through, it breaks out of this zone. What do? We simply adjust it to this price and see how it happens here, if we are actually going to get a confirmation here or not. So now we are actually waiting to see if we can get a confirmation on this particular level. Strong bearish engulfing again. So now we are 4 out of 4 on AUD JPY. Straight runs into profits on this position as well, as you can also clearly see. It doesn't come all the way down here, which was over 300 pips, but we still ended up making over 230 pips on this position as well. So we have a new low here. Now our support, we now want to see if the market is actually going to tap into that low and then give us a confirmation. Mind you, we did not have a confirmation here, so no trade was taken here. You want to come back and see if it's going to come and tap into the new low again, and then it clearly taps into the low again. What happens after tapping into the low? Strong confirmation, tweezer bottom. You bring your long position here. It means that now this is the 5th scenario. Stop loss at the bottom of the range. You're expecting it to come all the way up here, but you still need to be smart with your decision making and then have multiple take profits and then multiple positions. So let's say TP1 here, you are looking here as your TP2, and then let's say you are watching here as your final take profit, which was over 230 pips. So first candle straight into profits. What does the second candle do? Consolidates a bit, goes back and hits your TP1. Does it keep going up? It keeps going up. It hits your TP2. After it drops, after hitting your TP2, now you realize that it's creating what we call a new high on this level as well. But you still want the market to move out of here and see if it's going to be a new high. So now the market has moved out of here. It's now a new high. So once it's now a new high, what happens here now is that we keep going to see how the market reacts or respects our levels. This is now our new resistance. So if it breaks here, we know we can simply adjust it to this level. Now what happens? We simply just keep going, keep moving to see if it's actually going to come back and hit that particular resistance. So we are waiting to see if it's going to hit that resistance or if it's going to come down to this support. Resistance is now here, support is here. So you realize that now we are in August now. So it's been 2 months, everything has been going smoothly on AUD JPY. So we now keep going. We see if it's going to come back and respect the level when it gets to the resistance now. So we wait for the market to move. Then we decide based on what movements that the market makes. So you realize that the wick almost got close to this resistance. I'm still not going to take this trade because it didn't tap into that resistance. If I'm going to take a trade here, my stop loss must be really huge because I need to bring it all the way up here. So say for me, I'll simply just ignore because it didn't tap into that particular level. Then my support is also here. So does it stay here or does it go back up there? So it drops, it doesn't get to the support. I don't trade here. It gets to the support here finally. What do I get? I get a confirmation here, which is now a bullish engulfing. It can even be a morning star. Stop loss, I look at the level here to set my stop loss. Take profits, I'm looking at my new resistance which has been created up here. Does it go in profit for me? You realize that in this case it hits your stop loss and then it takes you out. So we have 4 wins, 1 loss now in 2 months on AED JPY alone. It comes to the support now, so we simply adjust the level here, then we wait. So you see a nice consolidation. We wait to see if you're going to get a confirmation on this particular support. So we finally get our confirmation here. So what do we do? Risk to reward now comes here, stop loss at the bottom, take profit up here, then we wait for the market to move. So this one goes into profits, smashes our TP1, keeps going up. The next day it actually consolidates and then comes back to entry before it goes up again. Then it creates a new high. So you keep, adjusting your levels and then you keep moving as the market keeps moving. So we are now in February. So you backtest, you realize I actually went back about 6 months and then I started practicing this strategy on this currency pair. So now you realize I have a fair idea how this currency pair reacts to my resistance and my support level. All I need to do is to just wait for it to tap into the key level itself. Then now I come and apply my candlestick confirmations there. Then I'm simply good to go. Then there's 2 more things I also need you to do when you're backtesting. It's better to actually film yourself while you're backtesting. How you can film yourself? I'm giving you a secret hack. No one might have probably told you this. You can actually film yourself with the publish tool you have here. So you simply click on publish, then you have publish idea, video, record video idea, and then speak your mind. So I simply come to record video. You read the rules they have here, and the maximum you can record for is 20 minutes. So you go to continue publishing, then you decide what part of your window you wish to record. So I simply click on my trading view, then I hit share. Once I hit share, you see it counts down here. Once it starts counting, you see it go over there. It simply means that now it has actually started recording. But in this case, it's simply only your voice and then your screen. If you want to include a video, you simply come up here and then you click on toggle media. Then you can see clearly down here that the camera is appearing down there where you can actually see my video there whilst I'm actually. So it's better to actually talk to yourself, speak whilst you're backtesting. I'm also recording myself and then the screen whilst I'm backtesting. So once you're done doing all of that, you simply now end it here. Once you click on it, once I hear the sound over here, and then you decide, you see go over the means that now. Yes, and then you decide whether you want to download. If you don't want, you simply click cancel and then you are now good to go. So you can see clearly a complete guide as to how I do my backtesting. This is how I'm able to build trading confidence on so many currency pairs I trade. This is why I'm able to just get up and know this is actually going to be a continuation, this is going to be a reversal or whatnot, because I know exactly how the market behaves anytime there's a scenario like this on the market. I know certain pairs go a lot with continuations, I know certain pairs go a lot with reversals, I know certain pairs also respect chart patterns a lot because of how I've backtested them. So follow every single rule I've given you in this video we've had today, and then your trading should never be the same again. Like I said, at the end of this video, you realize that you see things from a whole different lens. I hope this video was extremely positive for your trading journey. And if you like what you saw and you want me to make more content like this, I need you to like this video, smash that like button for the hour. We also need you to subscribe to this channel, hit the notification bell so you get notified anytime I go live or drop a video on YouTube. Also keep up with me on my socials. KOMMONFOREX on Instagram, KOMMONFOREX on Twitter, KOMMONFOREX on Telegram, KOMMONFOREX on TikTok as well. Also hit the link in my description to also join my trading community on Telegram. You also want to check the link in my description to also sign up with my recommended broker with the best trading conditions, 24-hour customer service, the tightest spreads, and then instant deposits and then withdrawals as well. As always, thank you very much for joining me in this one. See you in the next one.